Hey everybody, hey traders, Chris Pulver here, and welcome back to another segment of the Pulver Report, where we trade to be profitable, not perfect.
The market is tanking.
The world is ending.
I'm losing in all my stocks. Is Bitcoin going to zero?
Contrary to what novice traders and investors might be feeling right now, what actually matters is what we're doing about everything. Fact, you can make money in a bear market. Fact, you can make money in a bull market. Fact, you can also lose money in a bull or bear market. Just depends on if you are on the right side of the trade or if you are reckless. If trading was so easy, everybody would be doing it full time. But when you put real money on the line, people tend to get emotional.
You and me, we're family.
Promise never to do.
And emotional decisions can be detrimental and devastating to your success and profitability. Trading takes some grit and takes some intestinal fortitude. We have to have the courage to face these emotions and this stress during times like this head on. When everything is in the red, even deep in the red, we have to roll with the punches. Most importantly, this is not abnormal, okay? We have nearly 100 years in the financial markets from 1928 to now showing as such. Now, granted, so much has changed, but we still have trends, we still have ranges, we still have instruments to trade, and the markets create winners and losers. It is extremely important that we don't forget this one thing. Don't panic. If one correction or bear market slide ruins your trading and blows up your account, then you're not a trader, you're a gambler. So, take a deep breath, maybe several deep breaths, and think big picture.
This is fine. I'm okay with the events that are unfolding currently.
I read a Motley Fool report this week and it summed everything up pretty well. We need to make a rational observation about the realities of the market. Not every stock is perfectly priced. In fact, many are far from it, and we're seeing that right now in early 2022. Volatility exposes all of these mispriced stocks, and we start to see this great unraveling. Case in point right now is look at Peloton. Post-COVID crash bottom and Fed backstop pretty much pumped every stock available. But because Peloton was a work from home, social distancing, living my best life friendly company with a fancy bike, a program rollout, the stock took off. It began at a humble $20 per share, and then at its peak was up to $170. So nothing like an 850% run in less than 1 year. But reality has a funny way of getting priced back in for companies like Peloton, and boy oh boy, has it really caught up to it. Peloton is now 80+% off the highs. And although I look at the chart and I see this beautiful $80 supply level, I'm not touching this stock. I would rather focus on sectors and stocks that I can generate profits on now. I'm looking to focus on stocks that I want to own longer term, where I'm willing to ride out this bearish cleanse. I'm looking at investing in companies that make products, have great services, generate revenue, have free cash flow, have limited debt, positive growth outlooks, and aren't super sensitive to the Fed raising rates this year. What we're seeing right now is this massive deleveraging, and it's almost as bad with some of the overvalued stocks. We're talking about the same type of parallels that we had back in 2000 with the dot-com burst. Big tech and the high concentration of weighted index funds have more or less created the house of cards. So if Apple, Microsoft, Google, Amazon, Facebook, if they fall, they will drag everything down with them, but most likely in bigger proportions. And this is perfectly illustrated by seeing that the NASDAQ is down about 15 to 18%, but 1/3 of the NASDAQ stocks right now are down over 50%, and some, like Peloton, as high as 80 to 85%. So if you're not getting the memo, this is a case of major deleveraging, unwinding risk, booking hefty profits of what's left of these profits from a 14-year bull market, and a flee to safer pastures.
Did you see the memo about this?
And as an investor, what can be so frustrating is that when everything is literally falling, it's hard to know how to actually generate returns in this environment. But if you are a stock trader, we do have some tricks up our sleeves. A really simple one is an inverse ETF. These are instruments that move the opposite direction of the index that it's correlated to. So as an example, you think that the SPY or the QQQ or the DIA will drop. So what you can do is you can go long the SH or the SDS, and these are SPY related inverse ETFs. You can go long the PSQ or the QID, and these are QQQ inverse ETFs. And you can go long the DOG, that's DOG, and DXD, and those are DIA inverse ETFs. And right now I also like long volatility. The VIX stands for the volatility index, and it's commonly referred to or known as the fear gauge. And you can see historically when the market has been incredibly fearful, this fear gauge jumps like crazy. 2000, 2008, 2020. Those years should stand out as major risk-off events in the markets, and look at how the VIX correlates with those years. So when you're long volatility, I like to buy instruments like the VIXY, the VXX, and the VIXM. And a quick but really important note on volatility, this is not a long-term play, all right? There are major buildups in suppressed volatility. So when the VIX really explodes, we see heightened volatility for a week, several weeks, maybe a month, and then it starts to fade. So in other words, timing is really important on these instruments, but the payout can be quite generous. So markets falling, inverse ETFs, check. Next, we can trade options. In the last month alone, I implemented bear call spreads and straddles on the SPY and the QQQ. I walked through all of these trades in meticulous detail in my Equities on Demand trading room, and we made some really nice profits. We timed it well in September with the September effect. We timed it even better with more volatility kicking off 2022, and the SPY dropped 10 to 12%, the Qs dropped 18+%, volatility ripped higher, and we really timed this correction really nicely for some nice hedging profits.
All right, Chris, so I can be long inverse ETFs, I can be long volatility, I can learn to trade some options. What else?
Have a look at this graph comparing holding periods to probabilities of winning. Now, just a daily holder of a stock has a 50+% chance of being right. That in and of itself is amazing. You have an edge just being a buyer in the markets. And for every month, every year, and multiple years that you're willing to hold, the better the probability of holding on to winning positions. I mean, seriously, we're talking about nearly 100 years. That's pretty crazy. So it's nice to have a directional bias kind of baked into the market. But in times like 2000, 2008, 2009, and briefly in 2020, the market finds ways to purge itself. And volatility can be really tricky. Now, in the face of all this chaos and all this volatility, the easy answer is to stay the course, keep buying great companies, and give yourself time to hold onto your positions. But what happens if the market doesn't keep notching higher highs? What happens when the best bull market is behind us, or now it potentially is years away? This, my friends, is where the magic of actually trading comes in. If my best trading in 2022 is to not lose money, that might be considered a win when it's all said and done. If the overall market is down and down severely, and I end up breaking even or making a few bucks, that is a massive win in my book. But because I also trade options, because I trade Forex and I invest in cryptos, my asset performance doesn't live and die with just the stock market. And even though it's way more work to monitor and manage other markets, when a consistent yearly revenue stream depends on it, I can't make any excuses.
But Chris, the stock market is down.
But Chris, the dollar strength didn't end.
But Chris, Bitcoin isn't rallying yet.
And my response to all those questions is, what are you going to do about it? I am a trader. If you are a trader, you have to take 100% ownership of what is happening to your account. If I'm building positions, I have to be willing to hold them. If I'm trading current market conditions, I have to be willing to stay objective, maybe take short-term losses, and keep grinding out some wins. What we are seeing happening really fast right now is this massive exit from growth into value. This was a theme I talked about a lot in 2021, and it really was a mixed bag. We had growth still doing really well. We had value getting positioned, but the Fed has forced investors to leave growth and tech very quickly and put more into value. If you're going to stay invested, value is the play. I like energy, I like financials, I like materials, and I like staples. I know that's not the most exciting, but that will be lower volatility than tech. Maybe it's as simple as dollar cost averaging, staying patient and committed for the next 1 to 2 years. But maybe it's looking beyond stocks. It's looking beyond equities and trading something like Forex, where you can actually trade the risk on and risk off currency flows. But the reality is, even when the market hates the fact that the Fed is tapering and the Fed is going to raise rates, from that rate hike on, the market has a history that shows that it performs pretty well. So market cycles like this are completely normal. And if you look at a chart, they're actually healthy. We find some balance finally after having this crazy run-up post-COVID in March 2020. We bought our way out of a crisis. We printed our way out of a recession twice. And that is why the markets aren't loving the current situation. So it's okay. But at the context of the higher timeframes and a longer look back, you will see that this is just a pullback. So I think it's a great time to reevaluate your portfolio and reevaluate your risk tolerance. At this time, I like having cash at the ready. I like having dry powder. So when I see an opportunity that comes along, I don't hesitate to take it. There is nothing more frustrating than having all of your money tied up. So this is going to be an amazing year to trade, okay? Not just hodl, not just diamond hands, to trade. And most importantly, it might be a great year to save. Inflation is the real deal, okay? Everything is making life feel more expensive, mostly because it is. The Fed may try to combat inflation, but if they tackle it hard by raising rates 3 to 4 times this year, they risk tanking the financial markets and a recession is likely. If the Fed tries to soothe the markets, tries to keep asset prices floating higher, keeps sacrificing and debasing the US dollar, inflation and the economy will continue to run so hot that it will overheat and it will burst. So bubble or not, boom or bust, all we can do is trade our best and manage our risk. So on my end, here's what I'm going to do. I'm going to continue to build out my Trading 101 playlists. My Keep It Seriously Simple and all my timeless educational videos will now be housed in my Trading 101 playlist on my YouTube channel. If you have any requests, you want to learn more about trading stocks, trading options, trading Forex, trading cryptos, put it in the comment section, and if I make a video on it, I will give you a shout out. Agility is my focus this year. In my opinion, active management is going to be super important. So who's with me for 2022? It's going to be wild, but if you want to make money, regardless of the potential chaos, regardless of market direction, we need to be ready from all angles. And I vow to you this. I vow to make this a top-notch trading education and financial literacy channel. All I ask in return is you like the content, you click the thumbs up button, you leave me comments, you engage on the channel. It helps me so much. It helps this channel grow, all right? And it helps it grow naturally. I don't need bots, spammers, hackers on my channel. I want real traders that are looking to be more consistently profitable. All right, so thanks for watching. Have a great day. Happy trading, lots of profits. See you all very soon, and let's kill it in 2022. Take care.